Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look at the euro versus US dollar as we head into the weekend, as we head into a new trading week. Starting off by taking a look at the 4-hour chart. The month of September started right around here, and initially the price moved higher. And what do we test? We tested the 100-bar moving average on the 4-hour chart right here and here on these two bars, the first day of the trading month. And from that point, the price moved lower and lower and lower and lower. The last leg to the downside started last week, sending the price from a high of about 1.0736. That was short of the 100 bar moving average, by the way, up here. So we had sellers against that level, all the way down to 1.04872. Now that low that we reached in trading this week tested this low of the swing area right through here, where we had a number of different swing highs and swing lows. I've talked about that level in many of a video, and it was a key target on the downside for the euro versus US dollar, and lo and behold, the market bottomed off that level and bounced back higher. Let's go back to the 4-hour chart now. The move to the upside of this last move to the downside stalled against the 50% retracement of this move from this high right here to this low right here. That level came in at 1.06117, or just above that level. And there you can see the number of different swing highs and lows as well were also tested through here, right here, right here, right here, and right here. So a nice swing high stalled the rally in trading here today, and the price has since rotated to the downside. As if that wasn't enough, if you go back to our daily chart and look at the broken 38.2 of the move up from the September low to the high that we saw in the month of July, the 38.2 came in right around that high for the day at 1.06108. So there's a lot of stuff in play here, not only on the 4-hour chart, but also the daily chart right here at the highs, and the price has since rotated to the downside. Now, taking another look at this pair by drilling down to the hourly chart, let's look at what that has to say. And lo and behold, the high price in trading here today not only stalled against a 50% retracement off the 4-hour chart, not only stalled against the 38.2% retracement off the daily chart, but also stalled against the 200-hour moving average, and the price rotated to the downside now. So where do we stand? Well, we're in between the 200-hour moving average and all that cluster of resistance up through here, and the 100-hour moving average down here at 1.05614. And if we settle in here between now and the end of the day, guess what? Next week's trading, we're going to be using those two moving averages as our support and resistance. If the price were to move up toward the top side, we expect sellers against it. If the price moves to the downside, we'd expect buyers against this level and a rotation back to the upside. Conversely, we could see a break, and this is going to make these levels the barometer going forward. If the price breaks above this cluster of resistance up here near the 1.0610 or 11 level, that's going to be more bullish for the euro versus US dollar, and we look for further momentum in the direction of the break. Conversely, if we can't get above that level and start to move back below the 100-hour moving average, you got to think that the sellers start to take more control. Why? Because the market simply corrected to the 50%, corrected to the 200-hour moving average, corrected to the break point on the daily chart at the 38.2% retracement. So the sellers remain in control. So what I'm trying to set up for is, these levels represent big levels going into the new trading week. So pay attention to them, be aware of them. My name is Greg McCloskey. I hope you like this video. Good fortune with your trading. Bye-bye now.